Good morning and welcome to this week's Fact Friday. Last week we briefly touched on the IHT400. However, this week we are looking at the IHT400 in more detail. You'll see that I'm again joined by Ellie McCabe. Ellie, it's great to have you back on Fact Friday, and we have three questions for you today. The first question, Ellie, is when do I have to use an IHT400?
Thanks for having me back, Michael. Well, you have to use an IHT400 if the estate is not considered to be an accepted estate. So by way of a recap, an accepted estate is where an estate is either low value, so it might be within the deceased available nil rate band, or twice the nil rate band if they're claiming it from their deceased spouse. Exempt, so the entire estate is under £1 million and it's covered in full by exemptions, for example, spouse or charity exemptions. Or if it's the estate of a person who's died domiciled outside the UK, so is not liable to inheritance tax, provided the gross value of the estate in the UK is no greater than £150,000. So if it's none of those, it's going to fall into the IHT 400 realm. So usually on a day-to-day basis, we would deal with an IHT 400 when there's inheritance tax to pay, because that takes it immediately out of the IHT 205 realm. But it could be that everything's been left to a spouse. There's no tax to pay because of spouse exemption, but maybe the estate is over £1 million and therefore it's fallen into a 400. So there's lots of different ways and reasons why you'd need to use an IHT 400.
Excellent, great. Thank you, Ellie. And the second question here today is, how is the form different from the IHT 205?
Well, it's much more comprehensive. It's longer. It has schedules attached to it. So you need to give a lot more information about the estate, the assets and liabilities in there. Another difference is you need to use professional valuations, really, of the assets, because HMRC are going to be assessing the IHT 400 and they may question you on the values that you've submitted. So you can't just put in low values and hope that you pay less tax on it. HMRC are going to be asking you where you've got those valuations from. So really you need to get professional valuations of the assets. Another difference is that this document goes directly to HMRC. With the IHT 205, you would have sent that to the probate registry to get your grant of probate. It's not the same with the 400. The 400 goes to HMRC and they must approve it before the probate registry gets involved. So it adds an extra amount of time onto the whole process because HMRC need to do their bit before the probate registry then issues the grant of probate. And the thing to remember with that is once the grant of probate has been issued, that does not mean that HMRC have closed their file. The IHT 400 will continue to be assessed by them, and even once the grant is out there, if they have a question on it or in any of the values you've submitted, they will come and ask you about that. So you really need to be aware of that. Until final clearance has been given by HMRC, they can come back and ask the executors about that document.
Superb, excellent. Thank you, Ellie. And the third and final question is, are there any time limits or deadlines that I need to be aware of?
Yes. So if the estate is taxable, then and by that I mean inheritance tax, the inheritance tax usually needs to be paid when you submit the IHT 400 to HMRC. Usually it has to be paid in full. I say usually because there is an option to pay by instalments on certain assets, but even then that needs to be paid. The first instalment option must be paid when you submit the IHT 400 to HMRC. In terms of tax, there is interest that starts to accrue 6 months from the end of the month in which the deceased passed away. So really, we would say the deadline is 6 months to get it in, the IHT 400 in, and the tax paid. Otherwise, you're going to be paying interest after that date. There is also a deadline in that the IHT 400 does need to be submitted to HMRC within 12 months of the end of the month in which the deceased died. Otherwise, there could be a fine unless the executors have a reason why there was a reasonable delay. If the executors haven't become involved in the estate until a bit later, then it has to be within 3 months of them taking up their appointment, or there could be a fine. And another deadline to be aware of is if you are using the 400 route to claim the residence nil rate band allowance, then you have 2 years from the date of death, or again 3 months from when the executors first took up their position to claim that allowance. Otherwise, you'll lose it. And that's a really useful inheritance tax allowance, so you mustn't forget that deadline.
Excellent. Fantastic. Thank you, Ellie. Some great answers there. If anyone has any questions, please do pop them in the comment section below or drop either Ellie or myself an email or a phone call. And I hope you can all join us again next week where we'll be looking at things to watch out for pre-obtaining a grant of probate. Hope to see you soon. Take care. Bye-bye.